Good morning, everyone. Welcome to Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. With me, as always, Brian Caprice from Keep Trading Simple. Before Brian and I talk about some hot spots in the markets today, I do need to share our disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So what is the story of today? The story of today, just to tee it up, one, we've got the Federal Reserve Chairman Powell speaking to legislators today, and it's a required meeting. 10 a.m. Eastern. 10 a.m. Eastern. Powell is going to be speaking. He'll be providing testimony. So what is it that everyone's concerned about? What are they looking for? Well, we're watching it play out in the bond market right now. We are watching yields slowly creep higher on the back end of the curve. So what does that mean? There's a yield curve, which means how much interest people are looking for when they make a loan, and short-term rates are staying where they are the next 2 years. Even 5 years out there, barely starting to move. But what we're seeing is bond yields rising out about 10 years and 30 years. So further out in the curve, it's not so flat. We're getting a normal steepening of the curve further out in time, which is what you would expect. Now, they're big moves. This year so far, we've seen the 10-year note increase about 0.4%. Now, that's a lot because it was less than 1%. So it's a significant move. But now you're looking at a yield of only 1.3%. It's still, in the grand scheme of things, down near zero. So our rates are so low, historically speaking, that any incremental increase, yes, it's got people alerted, but it's still down near zero. In fact, even out 30 years, it's made a much bigger move. I think the 30-year bond has moved about 0.5%, thereabouts, maybe a little less, but it's only just above 2%. Again, historically speaking, very, very low levels. Now, but why is it such a concern for everyone? When you see yields rise, that means the prices of bonds are going down. So you might see some pressure on the stock market because people will sell their stocks and buy bonds if the interest rates are attractive enough. So you tend to see that happen. So everyone's got their eye on it. And the other thing that it means, people are preparing for inflation at some point, out 10 years, out 30 years. Now, if we thought we weren't going to have anything change for 30 years, that would have been awfully disappointing. But out 30 years, we're starting to see it. Now, what does that mean? Inflation? We're going to be talking about gold. We're going to be talking about products where when inflation comes into play, you start seeing some volatility. We've also got some things to talk about, for instance, in the equities markets like NASDAQ. We're also seeing some interesting things happen in some currency pairs. So I wanted to share with you, there's a lot to cover there today, and there was a little bit of education around bond yields, bond prices, inflation, and today it's all sort of coming together. So Brian, with that, you want to kick us off a little bit on Powell and yields and rates, and then
Sure.
I think let's jump in and start looking at gold. Will be the first.
Yeah, we got to look at gold today. Yep. So I can tell you guys right now, as when I was an advisor, for those of you who didn't know, I was an advisor for one of the big three banks. When I went through all my testing, I will say the hardest part of that I had to go through was bonds. Very difficult. It's not something we're ever taught about. You had to be able to calculate bond prices and understand tickets, realize how big of a market the bond market actually was, and how much control it really had everything. There is this inverse relationship between interest rates and bond prices, and that kind of threw me for a loop. I was very, very good at the options piece of it, but bonds threw me for a loop. So it was one of those things that I got through. Bonds is absolutely gigantic, and it's huge, and here's why it's important, all right? So a lot of the money that's loaned back and forth that makes the economy liquid comes through that bond, at the actual bond market. The Fed is the one that is of interest rates. Now, Todd mentioned inflation. Okay, inflation is something that we've talked about, and some of the big questions that we don't know right now is the current low interest rate environment the new norm? Everything that we're basing and all these things that we're talking about are based off what we've done historically. We've seen Japan run with a basically 0% interest rate forever, and they're seeing things. Everybody's at zero. That was the solution to the last problem that we had, and we're still pretty much there. This may be what is going. This may be what we have going further, right? So today, with Powell speaking, because again, Powell is the one who's responsible for raising interest rates. Nothing to do with Biden, Trump. I mean, that it has nothing to do with him. It has to do with Powell. He's the guy that's in charge of that. This testimony, I've highlighted here, the questions are not known beforehand. When you have, obviously when you know the question, you can script an answer. It's very, very easy. It's, coachable, all those things. When you don't know the questions, you can get a kind of a curveball. All right. The curveball is what's going to make the market move. All right. Now, everybody, for a while, and what we've heard for the last couple of weeks, this is normal. There's no inflation. We haven't seen it. It's not rearing its head. And we watch gold tank, right? Now, magician is here. Everybody's talking about inflation. With Powell speaking today, that's absolutely going to come up. Recovery is going to come up. Questions about, again, Powell passed the $1.9 trillion stimulus package. That would be the federal government, right? With the economy progressing and the recovery, the way we're seeing it, do we need the 1.9 million or the 1.9 trillion? That is an inflationary factor. So that can make things really, really crazy. Now, what does it do? How can we make money as traders off of it? Let me switch back over and let's talk about gold. So here is our gold chart from yesterday. Price was sitting right here yesterday. And if you got attended, I said, here was one of those ideal Harry Potter setups. Last week, we talked about how here between the 1792, 1794, it had been 3 times already, and number 4 was the magic break. Well, it came up, it based, it pulled back, and that's exactly where we were yesterday. And I said, I didn't see any here that was going to slow us down until we got to 1813. As you can see, we rallied all the way up. We tagged just around that little back, grabbed it, and now we've hit the top section. So we've pulled back to a very interesting level. And again, this over here was the 1 to 3. We wanted to make sure we had it, and obviously it did. Now we're kind of sandwiched right in between these two levels. I think both of them are definitely levels we need to watch out for. Again, Powell had power. These are only 30-minute levels. Powell has the power to blow through either of these top and bottom if he says something very, very big. Now, everybody's expecting more of kind of a weak or a dovish type stance on this. Remember, interest rates are used to control inflation. Okay. If he mentions anything about we're seeing inflation, again, gold will go up. If he says we're not seeing inflation, gold will go down. If he mentions raising interest rates to curb inflation, again, that will be great for the dollar, but again, not so much for gold. If he mentions raising interest rates, all the indices will go down. That's bad when you raise the interest rates on the indices. So there's a lot of things to juggle right now. And again, I'd be looking at these areas. If we get a punch through, look for a bit of a punch higher, because remember, and Hal said is a fundamental change in the market. It's not a headline, it's not an opinion, it's a fundamental change in the market. So again, look for pops through. If he says that we are not seeing inflationary factors yet, that we need to change any of our interest rates, that it's just not there, that he's not ready yet, him saying there's no inflation is also negative for gold. And again, could that punch lower? Sure, it absolutely could. And then we punch back up, and then we look Harry Potter, the same pattern that we had yesterday, but we looked for the downside, pushing back down to 1768. Now, Todd mentioned bonds. One of the ETFs, and again, we talked about kind of rates going up. The bond market is where a lot of kind of the hidden kind of secrets are, right? Because bonds is big money, right? I'm going to bring it back up to a daily chart. And again, it gets kind of crazy because, again, bonds are priced a little bit differently. But you guys are able to see it right here. August of last year, this is what bonds have been doing. This is kind of the trajectory, right, that we've been looking at for bonds. This is what they're doing now, right here. So, again, it's quite, the angle is very, very much different. But I will say, if you look at this one, zoom it way out, you can see that the last time that bonds were down in 141, 136, what did we have? we had a spike in very, very sharply and then bam, back out again. So it's very interesting where we are at right now. We have the $1.9 trillion of stimulus. We have Powell talking today. We have everybody knowing that Powell's talking today, and a lot of movement very, very, very fast. And the gold, drop in here very fast. Whoops, where we go? 30 minutes?
Yep.
Kind of the same idea. Now, couple that we can trade on gold, but I will say, when we talk about gold and speculation and making money, you'll hear a lot of people about risk on, risk off. Raising interest rates obviously affects the dollar, and I wanted to kind of switch this over and talk about.
Hold on, wait. Before we go there, I wanted to bring up the. Gold.
Okay, go ahead.
Yeah, I just want to bring this up on the platform. So again, with gold moving around, and we don't know what's going to happen here, right? So Brian's kind of telling us. In 50 minutes, Powell's going to start speaking. What could you be doing? What could you be paying attention to? What could you try to catch in a sharp, rapid move in gold? One would be the binary options, right? So if you start seeing these gold take off, you could buy a binary option trying to capture. Remember, every one of these binary options are either going to go to 0 or 100. So if you bought one of these and gold's taken off and it stays above that strike price, this will go from 40. Right now it's trading right around 40. It would eventually settle at 100 in 4 hours. So there's an opportunity where you could try to jump in. Now, if Powell says forget it, I don't care what the bond market's signaling, we're not going to do anything because we don't want to hurt any economic recovery, and you see gold tanking, you could go the other way. You could say, hey, this thing is not going to stay above this 1809 level. I think gold's going to sell back down. And if it does not settle above this price, it goes to 0. So binary option.
Could you switch that over to call? Can you switch knockouts real fast as well?
Yeah, that's what I wanted to show. And this is the other thing.
The increased spread. The binary is a little bit big, but there's a couple really nice scouts sitting right over there as well. And again, is there always risk in it? Sure. Could it whipsaw back and forth and take the knockout out? Absolutely. But I think if he makes, and again, they're expecting dovish comments. He says a dovish comment thing, something like we're not seeing any. That could be an interesting short for gold, and there's some knockouts there with low risk because it's close to the ceiling.
Yep. So the way, and again, I love it. So if you think, he says nothing, he's not going to touch rates. He doesn't want to harm any economic recovery. He wants to keep rates where they are. People think, okay, he's going to keep through Fed policy, keep inflation down. Gold starts to tank. You could sell a knockout. Now, if you sell a knockout, it's got the range. If it touches the upper side of the range after you sell it, you'd get knocked out and you'd have maximum loss. But, you are protected in case it spikes, but there's opportunity to profit to the downside. And you could just decide which knockout you would want to sell based upon where gold is when he starts talking and where you see, where your risk reward profile is. But this is a Delta One product. This gold right now is trading right at 1806.57, right in between the bid ask here. This is going to move right in line with the price of gold futures. So it's a very clean. Hey, I think gold's going to go lower than 1806. You could sell. You think it's going to go higher, you can buy, and we've got these levels. As well, I've got them marked off on here. That's that 1815-ish level that Brian has called out before, as well as this one just below the 1800. So gold is definitely something to be taking a look at today. Keep your eye on it. Now, we're talking about interest rates. I know that we've got some fun things we could talk about over there. So, Brian, I'm going to flip it back over to you.
Yeah, not so much it's interest rates, but yeah, I wanted to bring up the Swiss just real fast today, guys. Remember, the Swiss is kind of the gauge of risk on, risk off, as I just mentioned. Obviously, when there's something geopolitical, somebody evades somebody shoots a missile, the Swiss gains strength because of the neutrality, right? Well, in the overall currency market, again, the Swiss is one of those things where when people want to put risk on, the Swiss tends to go down. And you can see right now, all these blue boxes that are marked off here, these are all the pairs that include the Swiss franc since the European Open. And you can see every one of them looks similar. Large spike ups in prices, basing over the last 2 hours, these are typically opportunities for somewhat of a retracement. And again, could this be pre-positioning before Powell speaks? Absolutely. All right. Now, the only one we can actually trade with Nadex, though, is the dollar Swiss. And as soon as this pops up, let's see, come through. There we go. You can see that we did actually have a little level here that we got super close. So again, 90.16 could be an interesting level. There could be some short opportunity in this position today. And again, this one down into the 89.50. So about a 5th hip runner to the downside is what's possible. Again, maybe maybe we'll see what the open looks like and then take this for a retracement. But again, parabolic move up from the open, looking for somewhat of a reversal, could coincide with what Powell says and then bring it kind of right back to where we were last night.
Great. And I just wanted to bring that up so you could see it on the Nadex platform. This is in the binary options, the daily binary options. Here, actually, what did I pick? You know what? Let me scroll down. I'm trying to see which I clicked the 3 a.m. I'm sorry. Let's click the 3 p.m. Although the chart's going to look the same. There we go. It's obviously going to give you some different choices because there's different time frame. But we've seen that parabolic move up in the Swiss, and you're looking for a potential reversal here. So one way to play that U.S. dollar, Swiss franc. And these are the binary options. I wanted you to see that. The one other thing I think we wanted to get to, but I think we're running out of time. U.S. equity
We'll
market.
be back on in a couple hours, so we can cover more later.
Yeah. Oh, I forgot. You know what? That's exactly right.
It is Tuesday.
45. I forgot.
We'll do
Tuesday.
it later.
45 minutes. Powell speaking at noon Eastern. Brian's doing a full all markets discussion for the week.
Yeah,
if you haven't registered for it, go to the Nadex website, nadex.com. Look at our learning webinars. You can register for it. Join Brian then, because I'm sure he'll talk about.
Right now we'll know what Powell says at that point.
Yeah, we'll know what he said, and we could look at what's going on in all the markets. NASDAQ definitely soft this morning. Tech stocks getting hit, not so much the other equities. So look for a lower opening in the tech stocks. And then, and really, if you're looking at gold, and I would say, pay attention to what Powell is saying, and you'll start seeing it move. Once he starts talking, you're going to start seeing it move, and the game would be if he starts talking about not changing rates, you'll probably see gold go lower. If he's talking about raising rates, you might see gold go higher. Again, binary options, limited risk, limited reward. So you've got some protectors on there in case the market does something whim wham crazy or there's an anomaly, but that's what you would expect to potentially see based upon his comments. So you're just going to have to pay attention and listen. I'm sure it'll be on TV, and you could be listening to it live and watching it happen in the markets at the same time. It'll be it's something to keep your eye on. All right, with that, I want everyone to stay safe out there. There's still icy conditions. I'm dealing with a son with a broken hand and a wife with a broken wrist, both ice related incidents. And Brian here almost took himself out yesterday on the ice.
I tried. You shouldn't jog down a hill in ice. Not recommended, guys. Not recommended.
So everyone stay safe out there. And heads up today, there's going to be probably a little bit of volatility in the markets. So good luck in the markets. We'll catch you again at noon Eastern for a full-blown session. And then again tomorrow morning. Thanks, everyone.